But I think what we should do is get NBCC on air. The stock is doing well. The case for a chat, well, it's been a strong show by all the segments for the company. The real estate revenues are up 35%. EPC margins have moved up to 18.7% versus 4.6%. That's a phenomenal show by the company in the EPC division in this quarter. The overhang on the stock, if at all, is that the FPO has been approved. 10% of the post-issue equity share capital of the company, the FPO. But remember, this news is something that came out when the stock was at 975. So a large part of a correction because of this has probably already happened. But let's talk about all of that with Anup Kumar Mittal. He's CMD of NBCC, joins us right now on the show to talk about the numbers and the outlook ahead. Extremely strong show, Mr. Mittal. Thanks so much for taking the time out and joining us. If you can hear me, Mr. Mittal, congratulations on a very good quarter. What was the standout performance? I saw the EPC margins doing extremely well. Real estate revenues were up and about as well. What stood out for you this quarter?
This quarter was extremely good, and as a whole, this financial year was also very good in comparison to past. And I hope future will be much better than this.
Right, Mr. Mittal, also walk us through what really is the plan. You know, you've decided to raise money via the FPO route, which could be close to about almost 900 crore rupees at the current market price. What's the timeline for this FPO that you may have set out?
Well, we have not fixed any timeline, but the company needs some money for our redevelopment projects. If you see our order book and future planning, we have already order book of about 10,000 crore rupees in redevelopment sector, and almost 30 to 40,000 crore redevelopment projects are in negotiation or in pipeline. So in redevelopment segment, there is a provision that we will invest some money, initial seed money on fixed IRR of 18%. So to do job of say 50,000 crore rupees in next 4 to 5 years, certainly we need some money, and that's why we have gone for this proposal. And as far as timeline is concerned, yet we have not decided. In case government is going for any dilution of further equity, this can be clubbed with that, or otherwise we will think of separately.
So let's clear the air. Our understanding is that first Government of India will sell stake in NBCC, but what you're indicating is that right now the company is looking at diluting the equity?
No, not like that. We need 900 to 1,000 crore rupees. So we thought we should raise this money through FPO and separately or through Government of India equity.
Okay. Now the basic model of NBCC is that you always work on a cost plus basis. Whatever construction you do, you get a fixed margin. So in terms of million square feet of fresh construction, how much are you targeting in FY16?
Sorry, please repeat your question.
What is the million square feet which you're planning to construct in FY16 in this financial year?
You see, I can't tell you in million square feet, but definitely I can tell you in numbers of crores or turnover. This year we have closed about 4,600 to 4,700 crore rupees, and next year target is internal target is at least 6,000 crore rupees, and major part will come from redevelopment of projects. Million square feet of value depends where you are constructing. If it is in Delhi or Bhubaneswar or Jaipur, it is altogether different. So our internal target is at least to touch 6,000 crore revenue in this financial year.
Order book to support that kind of a revenue is what, 20,000 crores or 25,000 crores right now, Mr. Mittal?
Right now, as on date, our order book is in the tune of 23,000 to 24,000 crore rupees, in which we have not included few major projects like DDA 5,000 crore rupees. That is not part of this 24,000 crore rupees. And there are some other proposals which are not part of this 24,000 crore rupees. So this is a very conservative order book which I am saying. Means these are the projects which are either in progress or yet to start.
Mr. Mittal, the change in your commentary this time around compared to what you've always stated in the past, is that you've always guided for 20% growth. From 4,500 crores that you've touched this